Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have a market update video for you. It's May 24th, 2023. We're going to talk about some charts today, and we're going to talk about how simple this stuff is. I'm not going to say it's easy because emotions come into play and all that stuff, but it is simple, and we're going to talk about some videos that I've done on this channel and how anybody can learn to do this if you will simply dedicate yourself to learning technical analysis. So the first thing we're going to talk about is this chart from back in March. You can go back and watch the video if you want. I had hypothesized that the stock market looked like it might want to move up. And if it did move up, the target for that move was going to be $338.53 on the QQQ. Now, at the time, price was down around 290, 295. I don't remember the exact price. It was down around 290 something. So it's a pretty good pop, 10, 15% move on the stock market. And of course, if you have followed me long enough, you know that my personal opinion is Bitcoin is highly correlated, which is not an opinion, by the way, it's a fact. It's verifiable. Bitcoin is highly correlated to the QQQ. So if I was looking for a move up in the QQQ, by default, I had to also be looking for a temporary move up on Bitcoin, which we got, right? Both markets moved up over the last couple of months. So we pinged a target almost exactly to the penny, and then we had a pullback off of that level. So what's interesting is I did a video back in November of 2022 talking about Bitcoin, and in that video, in fact, let's just go pull it up. So in that video over on YouTube back in November of 2022, I had actually said, look, beware the Bitcoin bear trap, and I had hypothesized that Bitcoin was getting ready to bounce off of this level down here around 58 or so versus the QQQ and retest its supply level. Of course, that was on a monthly chart. So let's go take a look at that chart on a monthly level, and what happened? Oh, there it is. Exactly what I was talking about. It bounced off of its level of demand. Ping, right? This is when I shot the video, when it was sitting at this level. Ping, moved back up to its level of supply. Now, both of those calls were what I would call prophetic in nature, right? They weren't sort of kind of right. They were spot on, dead accurate with both the move itself and also the timing of the move. How do I do that? Am I magical? No. It's basic technical analysis, guys. It's what I've been talking about on this channel for 5 or 6 years now. It's basic technical analysis. In the case of the QQQ, what I was looking at was very simple. I was looking at the fact that we had put in this double bottom, we had put in what looked like a bull flag, and I was able to use what's called a Fibonacci trend extension to get a target for that move. That's as simple as it is, right? On the Bitcoin versus QQQ chart, even simpler, it's pure price action. We move back down. This used to be demand. We should get a bounce more often than not, and when you bounce, we should retest the old area of supply, which were these two tails here. That's all there is to it. Bam, bam, right? Really dead simple stuff. So anyway, a couple of charts. I want to use those as illustration that technical analysis obviously does work before I go into the next chart, because when I go to the next chart, there will be those people who are bullish who say there's no way that could happen. Just like there were people when I was calling for complacency back in November of 2021 who were saying, oh, you can't use charts like that. Well, bad news is you could use charts like that. It did exactly what I said it was going to do. Retraced 80% off of its parabola. So if you draw those fibs up from the bottom in 2020 to the top in 2021, right? I said over and over, hockey sticks retrace 80% as a rule of thumb. There's the 80% level, right where that dotted line is, right where that tail was. Exactly what I said. So with all that being said, let's look at this chart. This is the QQQ, which is an ETF for the NASDAQ. Now, why is this important? A, it's obviously important if you're trading the U.S. stock market because this is the tech market. B, it's important if you're a crypto trader or a crypto hodler because, again, Bitcoin has shown itself to be a correlated asset to tech assets, which means that when the tech market goes up, Bitcoin tends to go up. When the tech market goes down, Bitcoin tends to go down, except Bitcoin tends to overreact. So when the tech market goes up, Bitcoin tends to go up further, and the tech market goes down, Bitcoin tends to go down further. The tech market has a 30% drop, Bitcoin has a 70% drop, so on and so forth. Well, this is a 3-month candlestick chart, so each candlestick represents 3 months of time, and I don't think I have to tell anybody what this looks like, okay? This looks scary similar to the bubble charts, right? The generic bubble chart that I use over and over and over again, this chart right here. In fact, let me just copy it, I'll paste it over here. Are we seeing the problem? So this to me looks like the disbelief / suckers rally, which would be right here. This looks like the disbelief crash, which would be right there, right? That's where you're wanting to get in. That's like the March of 2020 crash on Bitcoin. That, by the way, I was wrong about, because when it crashed, I did not expect the Fed to do what they did, and I thought that, we probably had lower to go, and so I was wrong. I'm definitely not right 100% of the time. Don't want to pretend otherwise. But that's what it looks like. It looks like the disbelief crash, which will make, we have your hope and you have your optimism through here, right? So this would be hope through here, your optimism where you have this big leg up right there, then your belief phase right there, then your thrill phase right there, and then finally your blow off top phase right there, and then your dump, your complacency bounce. Oh, and what comes next? If this is what's happening, and we don't know that it is, but it would make a lot of sense with the overall environment, the macro environment that we find ourselves in. For example, the U.S. is literally days away from defaulting. I wouldn't expect them to default on their debt, but I guess anything is possible. But I think the fact that they're even getting it, this close is just silliness. But yeah, this is what it looks like to me. It's a little concerning. Obviously, if we're using volume profile, our support, it's going to be down around 52 on the QQQ. That's $52 a share, to be clear. We're currently sitting at $331 a share, roughly. And of course, it peaked at right around $408 a share. Now, again, people who don't know anything about technical analysis will see me talking about this and they'll say it's stupid, it's far-fetched, it can never happen, etc. The government would never let it happen, all these things. But let's just take all that nonsense aside. So when I make this call, obviously I could be wrong. And I'm not even necessarily saying it's a call. I think it's a little early to say that. I'm saying that this is a valid possibility. It is plausible, okay? So do with the information what you will. But is it realistic? Is it possible? Well, the dot-com bubble, excuse me, I stuttered there for a minute, dropped about 83%, okay? According to this chart, 82.91%. No, 83%. I was going to say, I thought I was lower than that. Right at 83% is what the dot-com bubble fell. The QQQ fell from about $120 a share all the way to a low of $20.49 a share. So if we had a similar drop, if we had an 83% drop from the top in 2021, not where we are now, but from the very tip top, an 83% drop puts the QQQ right there. Right there. And if you notice, it's not the big support ledge, but it is the ledge just above that. So is it plausible? Yes. Would it be historic? No. It wouldn't even be the first time that the tech market fell 83%. It wouldn't even be the first time in this century that the tech market fell 83%. It just did this 20 years ago. Okay? And the funny thing is everyone's all about market cycles when it benefits their bias. Everyone wants to talk about a market cycle when it's a bull cycle. But very few people want to entertain the idea of a bear cycle. Bear cycles, bear markets tend to retrace to a market's mean. In fact, they tend to retrace under the mean, and then the market moves back up. You cannot look at this chart with a straight face and say that the market is currently sitting at its mean. It's a ridiculous thing to say. We haven't even retraced this move. The average return of the NASDAQ is about 9 to 10% a year over its entire history. Yet from the low in 2020 to the high in 2021, the NASDAQ moved up 147.81%. It was ridiculous. And of course, it was a result of the government, A, turning on their quantitative easing, but B, passing out trillions of dollars in stimulus. And then you have people who were never in markets before suddenly dumping markets of money because they had quote unquote free money to play with, which of course was never free. We're paying that back many times over. Not fun. But it is what it is, right? That's a chart that you should be aware of. I'm not telling you to go out and trade that chart. I'm not telling you to short it or buy puts or any of that. That's completely up to you, what you do with the information. I just want you to be aware of it because it is a plausible, like I said, plausible being the key word, possibility. And of course, if the NASDAQ were to fall 83%, what do you think would happen to Bitcoin? Well, I don't know. Let's look at Bitcoin. Here's Bitcoin versus the QQQ. not versus the US dollar. I see really two plausible scenarios right now for Bitcoin. The first, we'll talk about the bearish scenario. Bearish scenario is that this was anchored down here, right? That this was just this chop through here, and that we still have depression to go, and this is going to go down and essentially retest some of these maybe 2018, 2020 lows, okay? That would put it down, about a 60 to 75% drop versus the QQQ. So we came down this area somewhere. And if the QQQ itself is falling, that realistically could mean Bitcoin fell to some scary low numbers for Bitcoin bulls. I say scary low, but the reality is if you're a true Bitcoin bull, it's the same thing I said in 2019, you should hope this happens. You should hope it falls down to $1,000 a Bitcoin. Because if you're truly long-term bullish, that means that you could load up on Bitcoin and that you could make life-changing returns if you're correct and it does go up to, hundreds of thousands of dollars someday. People don't really want that to happen because they're scared they're wrong and they want it to go straight up because it's less anxiety-inducing. But if you're truly bullish and you truly believe in Bitcoin, why wouldn't you want it to fall first so that you could load up? But it's very plausible if, and only if, in my opinion, the tech market crashes. If the tech market does not crash, I do not think Bitcoin goes down to $1,000, $2,000, $3,000. I think that it's possible it could drop down to $8,000 to $10,000, $12,000 still, but unlikely. Unlikely if the tech market has bottomed. Okay, I think if the tech market has bottomed, 15,000, whatever it was, 15.5, I think it's probably the bottom on Bitcoin if tech market's bottomed. But I don't believe the tech market has bottomed. But let's go back to this chart. So that's the bearish scenario, that this is anger and that we still have depression to go. The bullish scenario is that this is not anger. That anger was actually back here somewhere and that we had a really short depression phase and that this was depression. And the bullish scenario is that this is actually this. It's actually the quote-unquote suckers rally or the disbelief rally, which means that we still have this to go, a disbelief dump, and that then, if that's what's happening, we should start the next bull cycle on Bitcoin. It's possible, right? We do have the halving coming up in 2024. So it would make sense if history repeated, which it's not guaranteed that it will. But if history were to repeat, it would make sense that we would have that dump and then the halving would happen and kind of spur that next bull cycle. If you think back to 2020, right, the disbelief dump happened right through here. Okay, and the halving happened, I believe, around May of 2020, if I remember correctly. So, boom, dump, then the halving. So we could be repeating that. We could absolutely see Bitcoin repeat its cycle, dump, disbelief dump, and then the halving, and then boom, Bitcoin go on a whole new tear. While I don't think it's the most likely scenario, again, I find it entirely plausible. And I think it's very difficult right now to say which one is more likely. I know people don't like that. They always want somebody to take a stance and kind of stand behind an opinion, but I can't. I can't stand behind an opinion because there's not anything in the charts that is definitive. These are the two scenarios, but there's not anything that says, well, I think this one's 80% going to happen and this one's maybe 20%. It's very tough. It's very tough to say what's going to happen in Bitcoin. When I look at this has a strong resemblance to a disbelief rally. That's a bullish scenario. But I can also say that this back here didn't really look like a depression phase. I mean, really, were people depressed in November of 2022? I don't think so. What this looks like more to me is that the stock market was dumping and people were kind of capitulating or panicking, maybe even more back in this area, which is why I think it's probably anger. But I don't know. I really don't know. And I think it's important to realize that there's two scenarios there. The one thing that I did so wrong in 2020 was I married my bias, right? Once my bias flipped from bullish, which was the bull call, for 70,000, blah, blah, blah. Once it flipped and COVID warped my mind and everything else happened, once I got bearish where I was looking for those new lows, I just refused to see any other opportunity or any other scenario until it was obvious, until we got to 10, 12,000. Then I started thinking, I might be wrong here. So you don't want to do that. You want to be aware of all the scenarios, but you also don't want to be the guy that's married to the bull bias. And then when it's obviously going to move down to, 1,000 or 3,000 or 5,000 or whatever dollars, you're sitting there saying, no, I'm a hodler. I believe in it. I believe in it. Because why would you want to hold Bitcoin from 25 or 30,000 down to 5,000, right? If you do see an obvious reason to sell at 25 and you can buy back at 5, you just, quadrupled your stack of Bitcoin if you're a bull, and you want to hold Bitcoin. So some really interesting scenarios. I think the one that concerns me the most, though, is definitely this chart. This is very concerning to me because it does look like a cliche market cycle. It does look like this is going to be complacency. And this isn't the only chart that looks like this. I've also talked about there's a RUA chart that looks very similar to this as well. It's not as clean as it once was, but that's still a pretty clean looking bubble chart to me, right? I see that, and this kind of has that twinge of complacency to me. And think about what complacency actually means, right? We just need to cool off for the next rally. Well, that is what people are acting like. They're acting like this whole move down over the last year was just a retracement in the market and that we're guaranteed to go to new highs. I don't see it. There are indicators out there, just really simple indicators. Like one of the indicators that a lot of people like to go by is they measure the SPY. I think Warren Buffett's the one that came up with this. They measure the SPY versus the gross domestic product. And typically you want to see that down around like 1. Now my chart's not going to show 1 because it's not got enough precision on it. But to give you an idea, just consider somewhere down here in this area, okay? We might be able to add some precision and get it on there. Yeah, it's not really going to work the way I want it to work. But anyway, you can go Google this and kind of check it out for yourself. But to give you an idea, where we're sitting at right now versus GDP is literally the top, where it was at the top of the dot-com bubble. That's how far out of whack the market got. And again, I think it just had to do with the money printing and everything else. So, if you think about the dot-com bubble, it actually ended up falling all the way down here. And then during the housing crisis, the SPY or the SPX, S&P 500 fell all the way down to this level. And we're over here. We're way off of these levels, like 239% off the housing crisis and 125% off of the dot-com bubble. And I'm pointing those out because most people agree that we were in a bubble the last few years. There's not a lot of debate there. The debate comes in when people are trying to decide whether or not the bubble popped and we're done, or if it has further to go down. And I think the obvious answer to me when I look at most of the indicators is we have further to drop. And it's perfectly fine. If we don't, that's fine too. But if we do, I just want to remind you that bear markets are where people get rich. Right? It's what you do during a bear market that sets you up to get rich in a bull market. It's not what you're doing in the bull market. It's the bear market. It's the people that are paying attention during the bear market, conserving their assets. If, again, this is a bear market, I don't know that it is. It's up for debate. But it's people who conserve their assets and are putting in, their money at the lows or close to the lows and accumulating the biggest positions. Those are the people that get mega wealthy during the bull run. Other people make decent money, good returns, happy returns, and all that. But the people that make life-changing returns tend to be the ones that played the bear market right, and then they set themselves up for success. Like one of the things I did in 2018 was I was buying in December of 2018, both Bitcoin and Litecoin. So, the same thing with this. Have the right mindset. Don't get depressed. Don't get sad. Don't get anxious. If it is a bear market and we do end up seeing some crazy move down in the markets, look at those as an opportunity. All right. Don't sweat it. Don't beat yourself up. Woulda, coulda, shoulda, all that stuff. Nobody ever sells at the top. So anyway, that's it, guys. That's where we're at right now. If you want a quick update on Bitcoin, I will give you a couple of charts on that and we'll wrap this up. So here's a daily chart of Bitcoin. We'll get everything off except price. To me, it just looks like a range. I would have liked to have seen these lows hold if this was bullish in nature. And it's also not a good sign that there seems to be a lot more sell pressure than buying pressure right now. Now, that being said, if we got the weekly chart and take a look at this, just ignore this. This is a cup and handle idea I drew up a few weeks ago. It's yet to be confirmed. We're just I'm watching it to see if it happens. But this orange line is that 19-week moving average, which I've harped about for, probably 5+ years now. Really good line in the sand. Obviously, we had a tremendous move off of it back here in March. It's a little soon to be retesting it, but it is a line that I want to watch because it could potentially be support. And on a weekly chart, there is an argument to be made that this is actually an uptrend, right? That this is going to be a pullback back to these lows back here, which, by the way, is also, highs, not lows. Also lines up back here, right? Look at this. this basically a rounded bottom. It looks like it could be a retest of that rounded bottom, also retest the 19-week moving average, which would mean that there's potentially more upside there. Okay, and also, by the way, don't forget that even if I'm bearish in nature on the big picture, it's not all that unusual to hit that 61.8, right, on a bear market rally. So if you come down and pops all the way to 61.8, you're talking about a move toward $50,000. I'm not saying that's the most likely scenario, but I am saying it's possible. So you got to be really careful being overly bearish on Bitcoin. So there's the weekly chart. And then, of course, if you look at a monthly chart, the monthly chart is just retesting what used to be demand and is now flipped to supply. See? Just like that. So you're kind of trapped between this level, which is demand from the 2017 highs, and this level, which is supply, which is the 2021 pullback. And so until it clears one of these zones, it's really tough to say what Bitcoin's going to do. Really, really tough to say. This could absolutely be a bear market rally with more downside. It could also absolutely do something like this, where it comes back up out of there. I mean, there's so many scenarios, and I don't think there's enough edge to put my foot down and say, this is what's happening with Bitcoin. I don't know. It's not often that I say that. But when I don't know, I want to admit I don't know. I just don't know. If we put a volume profile on there, of course, this is a monthly volume profile. We never did really hit this ledge down here, so I'm still kind of like leaning toward that. Man, we're really at 12,000, really begging to be hit. But we'll see. We will see. Like I said, I think it depends heavily on the QQQ, or the NASDAQ, the tech market. If it's strong and the bottom's in, I don't think we're going to take out this low back here anytime soon. Maybe in the future at some point, but I would think that this is probably going to be the low for this bear market. If the QQQ is weak, I think we go back down. Minimum this level, probably going to fill in this gap down here if the QQQ falls apart. So there's a long, fairly detailed update, because I'm not doing these very often anymore. And on that note, I will mention that I basically quit Twitter. I had mostly quit it, but I was still posting occasionally. It's so negative over there. So if you follow me on Twitter, nothing happened. I'm not mad. Nobody upset me. Like, a few people checked on me and asked if I was okay. I'm fine. Like, nothing happened. It's negative. I log into Twitter and I just see the most negative stuff, and it's just poison for the mind. And also the reach is terrible. I have a few thousand followers, but I think it's mostly bots. I don't know. Or dead accounts or whatever. You post something, you post something that's like prophetic, like perfect call, and you get like 5 likes, and it's like, oh, this isn't worth the effort. I'm going to be scaling back how much I'm on Facebook, which I've been actively scaling back for about a year now. And I've obviously scaled back the number of videos I do. So if you want to see more stuff like this, there's a few ways to do that. One, you can just like, comment, and subscribe. The more interaction, the more feedback I get, that motivates me. I really enjoy helping people. When I don't get a lot of interaction, it just doesn't feel like it's worth the 2 hours it takes to do a video. You do the video and edit the video and all the other crap that goes into doing a video. It's like a 2-hour process. So that's one. And if you want to get even more detailed, you want to learn some of this stuff for yourself, this Friday, which is going to be May 26th, I'm going to be opening the doors to my trading class for 2023. It'll be the only time that I probably do it this year. May do it later in the year, like fourth quarter, but probably be the only time I do it this year. So I'm going to open the doors for a few days, maybe a week, take on some new students. And of course, that's going to come with my full training on technical analysis. Also comes with access to my proprietary trading view indicators that I developed myself and my private Discord. So you'll obviously get a lot more frequent updates in there. Other than that, I'm going to go ahead and wrap the video up there. As always, please remember that I am some guy sitting in a spare bedroom, which means that nothing in this video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable assets. If you enjoyed the video, give it a thumbs up now, leave a comment, subscribe to the channel, and as always, please remember to trade safe.